So here's a not so cheery question for a Thursday. If you own a buy-to-let and you die tomorrow, who pays the mortgage? It's not your tenants, not the lender, it's your family. Today I'm talking about landlord protection gap, the bit of buy-to-let planning that almost nobody actually does, and what really happens to your property, your mortgage, and your people if life goes properly wrong. We've spent this month talking about Savvy Landlord, the yields, the stress test, the limited company question. But the savviest landlords I know have also planned for the bit nobody puts on a spreadsheet. And that is what today is about. So no, this is not a doom video. It is a fix-it video. Give me 10 minutes and you know exactly where the gaps are and how to close them. Quick housekeeping before we start. This is educational, not personal advice. And where we brush up against tax or the law, your accountant or solicitor make the final call. So let's start with the uncomfortable bit, because everything else hangs off it. When a landlord dies, the rental property does not politely pause. The tenants still live there, the rights carry on exactly as before. The gas safety certificate still needs renewing, the deposit still has to stay protected, the boiler will still pick the worst possible week to pack in, and until probate is sorted, all of that lands on your executors. Usually that means your husband, your wife, or your grown-up kids. Someone who is grieving and who has just become a landlord overnight without even applying for the job. I've seen what that looks like. Your other half trying to learn what an EICR is in the same week as arranging a funeral. That's the gap, right there. Not a number on a spreadsheet, a kitchen table covered in paperwork at the worst moment in someone's life. And here's the bit that genuinely surprises people. A buy-to-let mortgage is technically repayable when the borrower dies. The debt does not quietly evaporate. It sits in your estate and the lender is entitled to ask for it back. Now, in practice, lenders are not monsters. Most allow a grace period while probate goes through, and many offer bereavement payment holds. But interest usually keeps ticking, and sooner or later, the estate has to answer the question. There are broadly three exits. Someone in the family takes out a new buy-to-let mortgage in their own name, and yes, they get assessed for affordability like any other borrower. Or the property gets sold and the debt gets cleared. Or if there's life cover in place, the cover pays the mortgage off and your family inherits an asset instead of a problem. One route involves a check, whilst the other two involve solicitors, estate agents and stress on a clock. And if your buy-to-let sits in a limited company, do not assume you are exempt from this. The company survives you, the shares pass through your will, but that personal guarantee you signed does not vanish. If you watched my last limited company buy-to-let video, this is the bit where the personal guarantee comes back around like a boomerang. So let me tell you a true story, and I want to be clear about whose story this is. This one belongs to Royal London. They published it and it's worth hearing. In 2023, at 53, he was diagnosed with stage 3 bowel cancer. And his first worry by his own account was not himself, it was how the mortgage and the bills would get paid. Because self-employed people do not get sick pay. His wife Laura remembered they had taken out critical illness cover years before, back in 2001. She had no paperwork, but one phone call traced the policy to Royal London. The claim was confirmed and paid, and they cleared the mortgage with it. James went through 14 rounds of chemotherapy and couldn't work full-time for 8 months. The mortgage was gone, and that one decision from decades earlier carried the whole family through it. Laura said afterwards she had just one regret. They never took out income protection as well, because even with the mortgage cleared, the lost income still hurt. 2 lessons in one story. The cover you nearly forgot you had can change everything, and clearing the debt is only half the job. Now think about what being a landlord actually is. It's running a small business. Most landlords have a day job or are self-employed on top. And if you're self-employed, then statutory sick pay just doesn't exist for you. The state safety net at that point is benefit support that for most working people is a fraction of what actually goes out the door each month. People sometimes say to me, but Patrick, the rent keeps coming in even if I'm ill. And that's true. Sometimes. But the rent was never your whole income, and it was never guaranteed. Tenants move out, voids happen, arrears happen. And who's doing the viewings, the maintenance calls, and the chasing while you're on a ward having treatment? The rent is one stream, your earned income is another. Serious illness can damn them both in the same month. So what does closing the gap actually look like? There's 6 tools and none of them exotic. 1, life cover size to the mortgage debt. So if the worst happens, the loan is cleared and your family inherits an asset, not a deadline. Number 2, family income benefit. Now, this is a type of life cover that pays a monthly income instead of a lump sum, which some families find far easier to live with. 3, critical illness cover, the James and Laura product, a lump sum on diagnosis of the serious stuff. Number 4, income protection, which replaces part of your earned income when you cannot work. Worth knowing, it covers your earnings rather than your rent, and that is exactly why it matters. Because your earnings are usually the river with no other backup. And number 5, proper landlord insurance. Buildings cover at the right level and rent guarantee and home emergency where they make sense. And 6, the most unglamorous one of all, make a will, and ideally lasting powers of attorney. If Terry Pratchett taught us anything, it's that death turns up whether or not the paperwork is ready. So make sure your paperwork is ready. And if your property is sitting in a limited company, add a conversation about covering that personal guarantee, because your family inherits the company and the company owes money. So I think providing for your family gets sold short. We talk about it like it's just the rent and the school shoes and the holiday. But providing for your family is making sure the thing you built doesn't turn into a burden the day you're not there. It's your family at the end of the day that keep the asset, keep the income, keeping their feet under the table while they deal with everything else. Nobody frames a protection policy and hangs it on the wall. But of all the things you could sort out this month, it is the one your family would most thank you for. The greatest gift you can give the people you love is the boring paperwork. And I know it's boring, but just think how much fun I am at a party. So 3 steps this week. First, dig out what cover you already have. Policies, dates, amounts. James and Laura nearly lost track of theirs and it saved their house. Secondly, write down what you would actually need paying if your income stopped tomorrow. Mortgages included, all of them. Third, get those gaps looked at properly. And that's where I come in. I arrange protection for landlords and working families all over the UK. And the first conversation costs nothing but 20 minutes. I've also written an article on this subject. You can find that on my LinkedIn. And the link to that will probably be in the description below as well. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Drop me a like and a follow for more and hit the links in my bio to get in touch. Protection policies have exclusions and limitations. Your home may be repossessed if you do not keep up repayments on your mortgage. And of course, most buy-to-let mortgages are not regulated by the Financial Conduct Authority. Speak to you soon. Bye-bye.